What's up everybody? Welcome to the Stocks channel. Today the stock market bounced to a lower high and then got rejected. Are the bears getting ready to take over control of this market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was up 0.51%, and intraday we did go up and fill that gap at 512, and I told you from there it was possible we get a lower high rejection and then come back down and fill this gap at 497. Now keep in mind that doesn't mean it's going to happen. We still do have the bull trend. We're still above all the moving averages with the price action. So of course there's always going to be the possibility we just continue to push higher within this bull trend. But one thing I want to highlight tonight is when you're a trader, you don't always assume something has to happen. Sometimes you're just simply looking for the best risk and reward, and sometimes you're okay losing if the risk is very low for the potential of very high reward. So the reason I mention that is if you look at SPY currently, if you are going to short this market, and I told you that a bear would likely look for a lower high to short from, you now have a very local high with a very local lower high, which means if you are going to short this market, it is now a very low risk short trade, because if we break out to a brand new all-time high, that is only about a 1% move to the upside. And when I say a brand new all-time high, I am talking about intraday price action. Now, if we're talking about a move all the way back down to a gap fill at 497, you can already see that is a 2.32 risk-reward ratio if you stop out at a brand new all-time high. And if you know anything about trading, that is a damn good risk-reward ratio. So there will be a lot of people that take that trade simply because the risk and reward match up. Meaning there's a lot more reward than there is risk, and that alone could either motivate bulls to continue to sell or bears to continue to short. And whether a bull is selling or a bear is shorting, they are both downward pressure on the market. So while I'm not saying that is definitely what's going to happen, because obviously we have no clue what's going to happen, it is very easy to know that that trade is playing out if we break down below today's low. So watch the price action, because I always tell you the price action does all the talking. And if the price action is going to do all the talking and we're going lower, we need to come down and break down below today's low. There's nothing complicated about that. Anybody could do it. Whether or not you have the patience and discipline is a completely different story. So look at SPY tomorrow and see if we start breaking the high of today's candle or the low of today's candle. And if we break the low of today's candle, you have to understand that bears and bulls are going to continue to sell this market. Bulls don't want to get caught holding a bag, and bears are looking for something to take a bite of. And this could be the perfect trade for the bears if we break down below today's low and confirm this was a lower high rejection. So again, I didn't tell you which one is going to play out because I need to see the price action to know for sure. But that is exactly what we're doing in the Discord servers. We're watching the price action and placing the best trades available. So as I said last night, the bulls were likely going to push higher, and that's exactly what they did. And then after we hit that target, they started to sell, and that's exactly what they did. So we're playing the odds, we're playing the best risk reward ratios, and the rest of it is going to work itself out, because if you continue this process day after day and year after year, you are going to remain profitable. So going into tomorrow, we still have the critical support at 507, and the bull breakout will be the break above 512. And if we get either one of those, that is going to tell you whether you should be long or short. And you could just sit in cash until we get one of those and then trade accordingly. It doesn't matter what you're doing. It strictly matters that you have a plan and you're following it and you're managing risk. On the NASDAQ 100 triple Qs, we were up 0.63% today. In intraday, we got very close to where I projected the lower high, which was right there, right around 443. And then from there, I told you we could get a lower high rejection and then come down towards the gap fill at 425. Now in the triple Qs, we did not fully close the gap like we did on SPY, and there's nothing that says we have to close the gap. We have a gap above and a gap below, so it is possible we go a bit higher tomorrow to fully close the gap. But again, that is not a requirement. This could be the lower high before we start to collapse down towards this gap down here at 425. Now, as you can see, the triple Qs did close down below the 5 EMA. So there is definitely a little bit of risk there, because on the daily chart, if the bulls were strong, there's nothing that says they should have closed down here near the low and down below the 5 EMA. So not the most bullish close, but it doesn't mean we can't go higher. We still have the bull trend. But as I told you on SPY, you do want to be aware if we break down below these lows and lose support right around 435, then we are very likely coming down to that gap fill in a hurry, especially that we're coming from a lower high rejection, which could mean the elevator down. So I'm not telling you we're going higher or lower, but obviously my preferred scenario is drawn on the chart, but the market couldn't care less what I think. So if we start to go higher and the price action tells you we're going higher, you need to throw this arrow out the window and continue to make bullish trades off support. It is still possible we are making brand new all-time highs. It is a very tricky market right now if you're looking at the market as a whole, because you have stocks like Apple that are absolutely in the gutter, down 15% off the highs. Meanwhile, the triple Qs are just a few days removed from an all-time high. I don't know what you guys look at in the market, but that's a little bit confusing. If you see Apple going lower and the triple Qs going higher, that correlation has been very strong for many years. On the Dow Jones, we were up 0.26% today, and intraday we slammed into the price target that I drew at the arrow and then immediately started to pull back. So we have nailed these targets to the upside, and the question from here is whether we continue to go higher or continue to go lower. And if you look at the Dow Jones, the price action did close down below all the moving averages for the second day in a row. Now that doesn't mean anything unless we break down below today's low and lose this support at 385, and then we are coming back down here towards 380. So 385 is a great risk level for support in the Dow Jones, and you can get a lot more bullish if we come out here and break the highs above 391. On the Russell 2000 IWM ETF, we were up 0.75% today, and I drew this out that we would likely go down towards the gap fill at 201 and then start running towards 214. And even with today's bounce, it's still possible this was a lower high before we come down here and test support and fill the gap. So that would look like we bounce to a lower high, come down here and fill the gap, and then continue higher. And that is still a very valid scenario, so it could line up with the rest of the indices if we are going lower before we go higher. Again, watch the price action, see if we break the high or the low of today's candle, and that'll tell you whether we're going higher or lower. And we still do have the bull trend with the price action above all the moving averages, so there's no reason we need to go down there and fill that gap now. On the ARKK ETF, we were up 1.6% today, and we did close back above the 20 daily moving average, which is still a positive slope, and the bulls still have the bull trend, albeit they're very close to losing it, especially if we break down below this neckline of support at 47 and confirm this as a double top rejection. A double top rejection would bring us back down towards 44, and a bull breakout at this point is going to require a break above 52. On the VIX, we are up 0.42% today, and the VIX is still trying to test that level at 15, which is completely normal during pullbacks. And today we did go higher with the VIX going higher as well. So a lot of people are getting uneasy, and meaning they're starting to load hedges while we continue to go higher in this market. Doesn't really mean anything, and it's not material unless we see a huge spike in fear. And right now we just don't see that. On Bitcoin, we're currently up about 4%, and Bitcoin is getting that dead cat bounce off of that very high volume rejection from yesterday. And just like the indices, this could be the lower high before we see that collapse back down towards support at 52,000. That's still my preferred scenario, but if we break this previous all-time high, it is likely we will go to the next price target higher at 75,000. On Nvidia stock, we were up 3.18% today, and Nvidia did hit the price target I gave you if we broke out above 860, which was up there at 888. And I did tell you if we hit that price target, there was a good chance of a rejection back down towards the gap fill at 823. So I'm not going to change that because so far that's what's playing out. If we start to break above this price target, there's a good chance we go to the nice whole round number of 900, and then above that we start higher towards 1000. I'm not necessarily sure we're going there just yet, and we do have this gap to fill, and we did open another gap down here at 860. On Tesla stock, we were down 2.32% today, and Tesla continued to close down below 183. So again, below 183, that is a risk off look, which means even though I drew the arrow that we could bounce from there, you need to manage risk while we're below it. It's as simple as getting more bullish if we can get back above 183 and staying risk off below 183. Watch the downside supports right around 173 in the bottom of this channel, which is in the low 160s. You can get a lot more bullish if we can break out of this downtrend and get back above 197. On Apple stock, we were down 0.59% today, and we are now the third day below the lower Bollinger Band, and we have now gapped down and opened below the lower Bollinger Band for 2 days in a row. So this is definitely a dead cat, and dead cats typically bounce before they go lower. So I still think Apple has a very good chance to get a dead cat bounce higher towards 173 to 177, and then because of the downtrend, that will likely be a lower high before we continue lower towards 163. Doesn't mean I'm going to be right, but this is very oversold, and this is a very good company, so there's really no reason to believe that it's going much lower, especially when the indices are near all-time highs. So this is one of those things in the market that doesn't make a lot of sense of why is Apple down over 15% from the local high, even though we have the NASDAQ 100 only 3 days removed from an all-time high. Again, markets don't have to be rational. That's why we follow the chart and not some kind of bias. And right now, if we're looking at this chart, I would be lying if I told you it didn't look extremely oversold and due for a bounce. It doesn't mean it's not in a bear trend, because it clearly is, and we are below the 200 daily moving average. So you do need to continue to manage your risk while we continue to break support levels. So jumping back over the S&P 500, this market is not boring at all. It is going to be very exciting, and I do think the month of March is going to be very volatile, which means we could go a lot lower and still close the month a lot higher, and it could be very wild and there could be lots of whipsaws, so make sure you have a very solid trade plan. In the Stocks Channel Discord, I'm giving very clear guidance on the price action and what I see, and I'm going to continue to say this is a stock picker's market, which means some stocks will continue to go higher while other stocks start to go lower, and that's why you need to understand the trend in each stock individually and whether you should be shorting that stock or going long that stock. If you look at stocks like Apple, they continue to go lower, and you look at stocks like Nvidia and they just continue to go higher. So it definitely matters where you're picking your stocks and where you're bullish and where you're bearish. So if you want more access to my intraday updates and technical analysis, you could join the Stocks Channel Discord server, and you can find out how to join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.